Ba, 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 ba. What is going on, everybody? It's actually been a minute. I was on vacation with my wife and then trying to enjoy the summer, getting a new boat motor and whatnot. But we are back. It's Mortgage Bro Science. And when I said I was going to make this video about DSCR loans, I generally felt bad because I was like, damn, a lot of people can't buy one home. And now we got to worry about buying your investment property with a DSCR loan. So DSCR loan, DSCR loan, DSCR loan. That's what this video is about. All right. I didn't even write my name up here. All right. So, DSCR. What is DSCR? It's actually a commercial formula. All right. Debt service coverage ratio. All right. All they want to see is that the proposed rent based off an appraisal is going to cover your mortgage payment. That's it. This is the best part. I don't need to harass you for all this shit. I'm not going to erase it, because I just don't want to, but I'm not going to harass you for all these documents. All I need is assets, proving that you can close, maybe some reserves, depending on how many properties you have. But all we care about is due to the rents, cover the mortgage payment, right? Now, on a rental property right now, because of the high rate environment and inflated home prices, except for Florida, because, Florida goes first, the margins aren't there, but, investment properties are for retirement, not for absolute income right now. And that's a lot of people can't wrap their heads around that. So anyway, I digress. Debt, service, coverage, ratio. So it's actually the opposite of debt to income. It's actually income over debt. If you watch our previous videos, you go debt over income. No. Income over debt. So if you go traditional mortgage, you could get slightly better terms, but I always say, time is money, and if it's simpler, sometimes you pay for what you get. Like if you're going to buy an investment property and rates 7 1/8, and then you're going to do it, that's conventional, right? And then you do a DSCR loan at 7.375. I'm thinking you got to go that route. I don't need tax returns, pay stubs, and not to mention, I got to make sure you qualify with all those documents. With a DSCR loan, all I'm worried about is when we do that appraisal, is that the proposed rent is going to be not even covering a full mortgage. You could actually show negative cash flow, right? You could actually, technically speaking, you could go down to a 0.5, depending on how experienced you are as an investor, right? And they'll see that on your application because you still need to fill out an application to show how many properties you do own, right? But yeah, say 0.5. So what that means is, reverse it. Remember, debt over income. No, it's income over debt. I mean, you could make $1,000. The rent's $1,000. Your payment's $2,000. There's some DSCR servicing companies that allow you to do this and collect no tax returns. Now, you will have to put more down, say 30%. All right, have good credit, and then maybe have some good reserves. But yeah, generally speaking, though, you wouldn't want to do this anyway. Imagine losing $1,000 a month, right? That wouldn't make any sense at all. So really, the better ratio is they want to see 1-to-1. So you're going to be renting it out. I know these aren't real numbers, but you're going to be renting it out for $1,000 a month, and your principal and interest payment, taxes and insurance, is going to be $1,000 a month. So it's 1-to-1. All right, net zero, net even. Okay, on paper, right? Because you're going to write off depreciation and other things, so don't limit your tax liability there. Okay, especially if you're a high W-2 income earner. This is where it's really money. And rental properties, you see doctors own millions of these because W-2 is the highest form of taxation, right? It's pretty funny that everyone wants to be an entrepreneur, but it's actually kind of hard to be an entrepreneur, right? I know we have YouTube and OnlyFans and all that stuff now, but people just can't get out of that rat race of working for somebody, having someone tell them what to do. Anyway, so because of that reason, the government says, you're a sucker, I'm going to tax the living hell out of you. Where when you're self-employed, you got 1099s and K1s, okay? You can write a lot of stuff off. All right, when you have a rental property, you're going to be going on your Schedule E here, and that's just a P&L for any property, okay, versus a business, and you can write off, depreciation. You guys hear EBITDA and all that stuff. Same principles apply there with a rental property. Either way, so that's also why you can show a negative cash flow. So I always tell everybody, I actually have a buddy who's a realtor. Yeah, a realtor I actually like. He just bought his first investment property with DSCR loan, and he has no home ownership experience. He flipped some houses there. All right, because they will account for experience, kind of like commercial loans. They account for experience and character and all that good stuff, like the 5 C's of credit. But this is obviously the residential space, although it is a commercial formula, okay? Or ratio, I should say, because it says ratio in the name. But yeah, if you're thinking about getting your investment portfolio up, I would highly recommend just seeing if anyone has a DSCR loan. It's really just going to make your life so much easier. right? The underwriting is easier, the approval process is easier, the closing process is easier, right? And I can almost guarantee you that you can put your rental property, this is important, I'm going to put this big, LLC docs, all right? People, it's so funny, they don't actually know what an LLC does. They just say, oh, LLC. Like, all right, what is it? Oh, it's a limited liability company, okay? And what you are going to want to do is put your rental properties in an LLC. What this does is if anybody sues you, all right, they're actually suing the LLC because LLC holds title and deed, right? They hold the ownership, all right? Although you're personally liable for the note, right? They're going to sue the LLC. So this way they can't come after your assets, all right? Again, it's obviously if you're buying a smorgasbord of properties here, you probably got some pretty good assets, and you don't want to have to give away 2 homes because you have this 1 home, right? So any DSCR lender will be able to put it directly into the LLC. All right, now, why is this important? Sometimes when you do a conventional mortgage, right, a lot of banks will allow you to and understand that you're going to be putting this investment property in the name of the LLC. But a lot of the smaller guys, the lenders, the brokers, what they want you to close, and then after you close, pay another fee, not like to them, just like it's hush hush, pay an attorney to then put the property in the name of the LLC, okay? And I always advise against this because technically speaking, that's a change of ownership, all right? You're changing, right, who's on title, who's on deed, right? That'd be like if I bought a house and then transferred everything to my kids, you still have to pay a transfer tax, right? So that being said, if that lender really wanted to, it's a change of ownership, it constitutes as a change of ownership, they could call the note and then you owe that whole mortgage back. Okay. So that's why it's super important. Like it's just easy. Actually, getting the LLC docs, it takes like 2 seconds to form. You just go on your state's website, boom, form LLC. So I need a certificate of formation, probably beneficial ownership, and then EIN number. Okay. And then you write as rain. So it's super easy. LLC docs, you're going to do the appraisal. Let's write that here. Appraisal. I knew a guy. I still know the guy. I don't talk to him much because he works in the broker world. He's, kind of scummy. But, God bless him. He's making money, right? So he was able to do DSCR loans for primary residencies. And I was like, wait, what? He's like, yeah, you could do a first-time homebuyer DSCR loan. I'm thinking like, well, they're not renting it out. Like, yeah, but if they were to rent it out, I'm thinking like, so you got people that don't qualify doing these and don't have money? It just made no sense to me. And it's a shame that people can actually do that. But hey, here they are. The terms are probably dog water. But anyway, so what you'll need with a DSCR loan is LLC docs like certificate of formation, EIN, beneficial ownership, setting forth the members and whatnot. All right. Then they're going to do an appraisal, and the appraisal is obviously going to gauge value, and then it's going to show you the proposed market rent. Now it's kind of tricky when you get into short-term rentals, like say summer rentals, Airbnbs. All right, you'll need to see a history of that or proposed history of said property, and they'll do like a market evaluation. This is all the appraisal's job, mind you, so you don't have to worry about it. However, if it doesn't support the findings, all right, and what you want to borrow, you might have to put more down or you'll get straight up denied. Okay, so and then long-term rentals is easy. You're not going to do short-term rentals week to week, weekend, just 1 year. That's the easiest way to do it. Okay, but not every rental is going to be for a year. Like, in second home areas, right? Like let's just say Florida, Vermont, right? High B&B environments, or Tennessee's a big one now too. Nashville, right? Feel like a woman. Nashville, big short-term rental area. So it's going to be a little more difficult for them to do a market analysis on the rentals to be received, but it's doable. And yeah, just super easy. You just need assets and reserves and obviously insurance. And here's the kicker: with Fannie and Freddie Mae, we'll say guidelines, you can't have more than 10 finance properties. Okay, finance properties is huge. It doesn't include line of credits and home equity loans. Okay, however, and then every bank is going to say, well, all right, due to home equity loans and lines, do they count as finance properties? Technically, no, because that's not actually what's financing the property. It's a lien against, right? But so for all intents and purposes, let's just say you can have 10 mortgages, all right? And then there's banks out there like, all right, even though Fannie and Freddie say you can't have 10 mortgages, you can't have 4 with us. If you're going to get like a portfolio loan or whatnot, you can't have more than like, say, 4 or 6 with us. So with a DSCR loan, you could have 20 mortgages. They don't give a rat's about how many mortgages you got, especially in the name of the LLC. So let's write that. You could have greater than 10 loans outstanding. So you just keep racking up loan after loan after loan after loan after loan. Now it's like pretty heavy exposure, but you could if you wanted to. Like if you're gonna go like out in Ohio and like houses are worth $100,000, right? Just buy 10 of those bad boys. You're right as rain. Okay, but that's actually huge. That's actually huge. You know, sometimes we'll see people like 30 properties. Yeah, doing that income really stinks, but you got to do it, right? Yeah. So DSCR loans. This is the Mortgage Bro Science. Please like and subscribe, and try to send to everybody. I'll end with this. As I'm making this video, I'm laughing because there's like you can just Google it. Because Pat is bartending, so I don't have someone to edit and put a screen up here. There's say all the homes in the United States, okay, of which 50% are owned free and clear, and like 42% or something have a rate less than 4%. Okay, so that leaves, let's just round it off to 40. That's 10% of homes in the entire United States are for sale. Okay, because think about it. No, the rate right now is, let's say, 6.375, 6.5. It is. What does it say? Oh, it's 7/8. I said 8/7 on my watch. It's like it's not August. So it's July 8th. Yeah, so we're still about, just to say, 6.5, right? That's 2 points over the Treasury at 4.5 right now. So the people that can afford homes, or everyone's bidding on 10% of homes in the United States, right? New construction's down because with the war and the price of oil going up, all the commodities across the world are going up. So not only can people not afford, you're bidding against other people, pricing everyone else out. So, and now here I am talking about investment properties and DSCR loans, which is funny because people are buying these homes as investment properties. And the first time home buyers, people trying to just start a family and like actually live, have no chance in hell. Anyway, this is Mortgage Bro Science, not to make it depressing. DSCR loans. Like and subscribe. Any questions at all? Look in my description for links that may help you and inform you. But yeah, DSCR loans, great tool, especially to expand your real estate portfolio. Thanks so much.